Good documentation. There are, in fact, TP documentation, we master file, local file, and CBCR. Master file, local file, and CBCR. That is country by country reports. These three, they are together. They are known as the three-tier TP documentation. Tier 1, tier 2, tier 3. Three-tier TP documentation or documents, right? Three-tier TP documentation. And we mentioned them number of times in our discussion, and principles of international taxation also, and here as well. Fine. In fact, you would remember that in BEPS, when we were having a discussion in principles of international taxation regarding BEPS 1.0, that the project that ran from 2013 till late 2015, 15 action plan items, and among those 15 action plan items, action plan number 13 that dealt with TP documentation. Fine. So you can say that these three, the three-tier TP documentation, this has been inspired by BEPS 1.0 action plan 13, because this BEPS action plan 13, that actually it had the objective of harmonizing the TP documentation. And you would also remember that action plan 5, 6, 13 and 14, they were minimum standards. So in any case, that 13 was also adopted by almost all the countries, and it's what, 2023. So by this time, you find that TP documentation has been standardized more or less standardized all across the world. So these three are the documents which are prepared. Fine. So action plan 13, that inspired this three-tier TP documentation. I will take you one step behind, one step before this. This three-tier TP documentation, actually, why it was created? Three-tier TP documentation, the creation of three-tier TP documentation is supposed to fulfill three objectives. There are three objectives behind the creation or behind the proposal or to create three-tier TP documents. Objectives, and the objectives are also three. Three objectives behind TP documents, behind TP documentation. Objective number 1, 2, and then 3. Remember, we have discussed in our TP classes that there are two approaches. Ex ante approach and ex post approach. Ex ante approach is that approach that takes place at the time when you are undertaking a transaction. You enter into contract, you assume the risk, ex ante contractual assumption of risk. At the time, that is, you are yet to undertake the transaction is yet to begin, and that very time, at that very moment, you contractually assume the risk, that this risk will belong to AE1 and this risk will belong to AE2. Contractual allocation, ex ante. Ex post is after the event, after transaction has been completed. So ex ante contractual assumption of risk, ex ante contractual assumption of other responsibilities. This is one of the preferred areas. This is one of the preferred ways by which the companies or MNEs can actually show to the tax authorities that they have taken reasonable steps to comply with the arm's length principle. The first objective actually deals with this. The first objective focuses upon creating a culture of compliance. Compliance with what? compliance with the arm's length principle, that the companies right at the moment when they were planning a transaction, they should document all the reasons, all the contractual allocation of risk, contractual assumption of responsibilities, etc., 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 1, 2, 3, 4, 5. So that they will have a firm documentation, firm justification if at all the need arises when they will submit the documentation to the tax authorities. They will be able to prove to the tax authority that they took reasonable efforts to comply with the arm's length principle right at the time when they were just planning the transaction, creating a culture of compliance. So they will take reasonable efforts to comply with the arm's length principle because they know that ultimately these reasons have to be put in the documents. So number one reason, creating a culture of compliance. Creating a culture of compliance. That is from the perspective of the taxpayers or MLE groups. Creating a culture of compliance. Creating a culture of compliance. Culture of compliance. To show that they have taken reasonable efforts to comply with the arm's length principle for the transaction in issue, transaction under focus. Number one objective. Number two and three, they are from the perspective of the tax authorities. Second objective that deals with transfer pricing and informed transfer pricing risk assessment. Informed TP risk assessment. Taxpayers just have one or two transactions, one group, but tax authorities of any country, they have hundreds of transactions. There are so many MLE groups operating in their jurisdiction. It is virtually impossible, it's virtually next to impossible that they will be able to minutely investigate every transaction. Their resources are always overstretched. How to help them in their jobs? With the help of TP documentation. These TP documents, master file, local file, and CPCR, they can help them to perform a quick first stage informed TP risk assessment. Okay, this is fine, check. Contractual allocation of risk is fine, then control over risk is fine, financial capacity to assume the risk is fine, check. This is fine, no problem, leave it. Let us quickly move on to the second transaction and then third transaction. So in the first stage, they want to conduct a quick TP risk assessment for as many number of transactions as possible. So for performing the TP risk assessment, an informed one, these three documents, TP documents, they help them a lot. Fine. So second objective is from the perspective of the tax authorities for informing. It helps these three documents, they help them in performing an informed TP risk assessment. Right? Third objective. Now supposing they had 100 transactions in front of them. They quickly scanned through all those 100 transactions. They performed a quick TP risk assessment, and out of those 100 transactions, then they zeroed in, then they focused, then they lifted, then they found that there were 10 transactions or 20 transactions which require further investigation, which may even require audit. So in the third stage, or rather in the second stage, this is the first stage, in the second stage, performing of a thorough TP audit. A thorough TP audit. Thorough TP audit. This is the third objective of the TP documentation. That TP documentation will also give the tax authorities a lot of information which will actually help them to perform a thorough TP audit. So in the first stage, informed TP risk assessment, and in the second stage, a thorough TP audit. These are the three objectives which were behind the creation or the proposal of the 3-tier TP documentation.